So, what the heck is an adjustable rate mortgage or an ARM? It's probably a phrase you've been hearing a lot about lately on social media, TikTok, YouTube, wherever you're doing your research to learn more about the mortgage options that are available to you. And you're probably curious, is that a product I should be utilizing now while interest rates are high? So, today we're actually going to unpack that a little bit and we're going to go over some of the pros and some of the cons of an adjustable rate mortgage. Moving forward, I'm just going to call it an ARM. So, whenever you hear me talk about an ARM, that's what I'm talking about: adjustable rate mortgages. First of all, what is an adjustable rate mortgage? Basically, what it's saying is instead of having a fixed rate for the entire life of the loan, you're going to start at one rate and you might have a different rate by the end, up or down. Every time you would have a new adjustment period, it would have an interest rate that reflects the current market. As an example, if today the rates are at 7%, that's where you're going to start out. And then 3 years from now, when it does the first adjustment, you might be looking at an interest rate at 6% because interest rates went down, or 8% if they've gone up in the next 3 years. So you're going to have to do a little bit of forecasting and make your best guess as to whether or not doing an ARM is going to be in your best benefit or not. So the way you're going to see these ARMs advertised is going to be something similar to the phrasing I'm using, which is going to be a 3-1 arm, 5-1 arm, 7-1 arm, 5-5 arm, maybe a 5-3 arm. And what those are telling you are when the adjustments happen. So the first number in that description is going to be your initial interest rate period that you start for. It's not the actual rate. I kind of said that confusingly, but it's the duration for how long that first interest rate you get is going to be fixed. So if it's a 3-1 arm, it's telling you it's going to be fixed for the first 3 years. That second number is telling you how often it can adjust thereafter. So, an example, if we did a 3-1 arm this year, it's 2022 plus 3 years, our first adjustment is going to come up in 2025 and it'll lock in at whatever rate. And then from there, every year after, so at the end of that first year in 2026, you would be looking at another adjustment, and then 27, and then 28, and it would go like that for the life of the loan. Now, when you look at the 5-5 arm or a 5-3 arm, it's going to be very similar, right? So you're going to have that 5-year fixed up front, and then it's saying on a 5-5 arm, every 5 years, because that's the second number, it's going to reevaluate, relock, and it's going to do it every 5 years. So you get a little bit more stability than you would on a 3-1, 5-1, 7-1, whatever the case may be. And a 5-3 year would be somewhere in between. It's going to lock in for 5 years up front and then 3 years every 3 years thereafter. So that's the explanation of what the numbers mean on an ARM product. If your loan officer or the realtor you're working with tells you, hey, you should do a 3-1 arm, they're telling you, hey, you're going to lock it in for 3 years and then you're going to readjust every year thereafter. So now that we understand what an adjustable rate mortgage is or an ARM, should you do one? What are the pros? What are the cons? Well, the pros are it helps you hedge for the future without having to redo a mortgage down the road. So, in my opinion, you should really only be doing an ARM in one of two circumstances. The first one is if you're forecasting or you're guessing or assuming that rates are going to improve over time. So we've seen a run up on interest rates. And the reason why this conversation is coming up now is a lot of people think that the rates are going to pull back at some point. So they're saying, hey, just do an ARM. You'll start with that high rate, but it's going to come down. So don't worry about it. Again, no one actually knows. So please keep that in mind. It's an opinion, it is a guesstimate. Even the most educated economist doesn't actually know where rates are going to be in 5 years. The second reason or situation where I think an ARM would make sense is if you're buying for the short term. Most people know they're not purchasing and keeping a home for 30 years. So a situation where that may occur is someone who's in the service, for example. You may get a 4-year deployment, not deployment, you may get stationed for 4 years right here at Wright Pat Air Force Base. And maybe you're only going to be here for 4 years, and then you're going to go off to Alabama, Florida, California, wherever we got Air Force bases around the country. You may do a 3-1 arm. You might do a 5-1 arm because you know you're not going to be here. And maybe the 5-1 arm is offering a better rate than the fixed rate mortgage that you could get today. So those are the only two situations I can think of that utilizing an arm would make sense. So if those are the only two reasons I think you should be doing an arm, what's my opinion on them right now? The only thing we've really seen is that the Fed keeps increasing interest rates. I know 7% is really high and it feels really high because we had recently, within the last year, been at 2.75%. And there's some people who think we're going to go revisit those low interest rates. I don't know that that's going to happen. I wouldn't say I'm 100% confident in my own opinion, but if housing prices aren't collapsing, at least I'm not seeing that in our market, they might be softening up. It might take a little bit longer to sell, but demand is still there. People are still buying, and people are still getting really good prices for their homes. I don't know that a 3-year arm would make sense, maybe a 5-year, but man, it's super hard to forecast 5 years down the road. What if rates go up to 10% and then settle in around 9% for the next 10 years? I mean, that's not too bizarre. I got my first mortgage in, I think it was 2013 when I bought my first house. And the interest rate I got then was 5.25%. Everyone told me I was never going to get a better interest rate and I should be lucky that I got that. Well, I have a 30-year mortgage at 2.75%. So much for people's crystal balls. So do you miss out on the 7% and risk ending up with a 9, a 10, 11, or a 12% in the future? I mean, you got to remember back in the 80s, mortgage rates went all the way up to 18%, maybe 19%, but definitely 18. What's the upside versus the downside? Do we think rates are really going to go to 3? I don't. Maybe 5 or 6%. I think if there was a pullback, if you're considering an arm, what I would recommend to you is really give it some thought. Is this a starter home that you plan on selling in 4 years because you're going to need something bigger because you're going to plan on having kids or whatever? I don't know what your plan might be, but if you are in the military and you know you're going to only be here and stationed here for about 4 years, then yeah, maybe an arm makes sense, especially if the rates are better. I mean, if you could do a 7-1 arm, even if you got extended, 2 or 3 years, you would still be covered for the most part, and you could still edge out and come ahead. Even if you were here in 8th year and say the rate did go up, those are things that you need to think about. But honestly, think about it. Don't trick yourself into taking a better interest rate today because you want that payment to be affordable. You really need to plan on what these adjustments could be in the future. Let's take a look at what they are going to look like. So let's assume we're doing a 3-1 arm. So we're going to be fixed for 3 years, and let's just use today's rate, which is 7.741%. If we do that on a 30-year fixed for a $200,000 loan, we are looking at a monthly payment of about $1,432. That does not include our homeowner's insurance, and it also does not include property taxes. This is just the principal and interest payment. So if in 3 years we can make an adjustment, and if the max adjustment per adjustment period is 2%, and we go to 9.741%, you notice our payment's going to jump to $1,717. So almost $300. I don't know about you, but I know for my family and our budget, a $300 increase in our housing allowance, it's going to have an impact on the way we live. And what could this look like if you were maxed out, say, 8 years from now? So if you're starting off at 7 and the max is 5%, that puts us at 12.741%. Our payment now goes to $2,172 when we were at $1,432. $600 increase. If the $300 doesn't affect you, I think this definitely would. You need to plan and seriously think about the idea that you may be facing a scenario where, yeah, the payment's going to go up. The first couple of years, you're not making a whole lot of principal reduction. So this might be off a little bit because I didn't change the loan amount. But let's say you aggressively tackle this and you got it down to 180,000. That 12% interest rate, if you do experience a max rate increase of 5%, goes from that 7.741% to 12.741%. And the payment's still $1,955. And I don't actually think you're going to pay 20 grand towards your principal in 3 years. I guess it wouldn't be three technically. In a 3-1 example, you'd probably be looking at year 7 or 8. So maybe you're getting a little bit close to that, but I think you get my point. You're still hurting. That payment is going to affect you. Don't let a greedy real estate agent or loan officer convince you that's the right move if you're not going to be able to swing it. You have to anticipate the unexpected because these are not impossible or unrealistic scenarios that you could be facing. So with all of that being said, the pros of an adjustable rate mortgage or ARM is that you may get a better interest rate today versus what a standard 30-year fixed mortgage might get. But the big con of this is you may be putting yourself in a situation where you're going to struggle financially if you do face these higher interest rates. And it's really real. Everybody likes to downplay it. Everyone wants to be some type of real estate guru and say, hey, I got you all figured out. You don't have to worry about the 7%. We're going to get you at 6.5%, 5.5%, and we'll not care what happens in 3 years. You need to care. It's going to be your home. It's going to be your mortgage payment. And you just never know what's going to happen. Maybe you're thinking like, well, dude, I would just refi into a 30-year fix. It's not that big of a deal. Well, what if you lose your job or your credit gets hit? What if you don't qualify for a mortgage down the road? There's no guarantee you're just going to be able to refi. I saw a really good point on a TikTok video of all places from a very uneducated person. So this was good for them. But anyway, what if property values do slide back and you didn't put that much down? You may not be able to refi. Even though you qualify, your house may no longer qualify because your loan to value is skewed for the short term. So these are all things you need to think about. I'm not here to tell you that you should do an ARM. I'm not here to tell you that you shouldn't do an ARM. I'm simply here to explain what an ARM is, and I'm advising you take caution before you enter into a mortgage that is an ARM. So I hope that helps. The goal here at the Miami Valley Experience is to help educate both buyers and sellers on everything real estate related. And then we also like to do some fun stuff, food reviews, and discuss whatever's happening within the Miami Valley so that you can be better informed and you can make the best real estate decisions for you. And if you have a family, for your family as well. My name is Jonas. I am the broker owner of Streetlight Realty. And I also host the Miami Valley Experience. If you're considering an ARM and you want my opinion on it, drop me a comment, shoot me an email, do whatever you got to do, get in touch with me. And I'm more than happy to listen to your situation, your scenario. And I am more than happy to give you my 2 cents on whether or not that's something I think I would do. And with that being said, I hope everybody has a great day. And I hope you enjoyed the video. Subscribe, like, comment, all that stuff helps. And it lets us know to keep making videos.